Thinking about that $75,000 truck for your business? In 2026, you may be able to deduct the whole thing in year one if you structure it right. I'm Tony Hoong, a licensed CPA who helps US business owners, real estate investors legally compress 5 years of write-offs into one. In this video, I'm going to show you how Section 179 100% bonus depreciation work in 2026, how a $75,000 to $100,000 business vehicle might be fully deductible in year one, and the weight rules and deadlines you cannot miss if you want the full benefit. This is legal, ethical, IRS compliant strategy. You're just choosing the fast lane instead of the slow lane.
All right, so today we're gonna be talking about 2026, Section 179 of the tax code and bonus depreciation.
So first things first, you need to know the limits.
So this number is astronomical for most people,
But for the big business owners out there,
this could be applying to you, but you can get up to $2.56 million
in qualifying equipment and vehicles,
and you can elect Section 179 and you'll be able to expense the whole thing the first year. Now, if you're really rich, and what does really rich mean, is gonna be from 2.56 million all the way up to 4.09 million.
And if you're buying that much equipment, you're gonna start seeing a phase down. What a phase down essentially means is that every dollar over a limit chips away at what you can actually expense.
And lastly, when you're too rich, AKA you're making more than $4.09 million in qualifying equipment purchases, you do not get a single benefit at all. So let's just say you're a contractor, because contractors always need tools, equipment to actually carry out their job. And let's say they buy a $75,000 truck the first year. Then of course you're gonna need the good old tools and equipment. That'll be 125 grand here. So we're gonna have a total of 200K in expenditure. And going back to the cap, it was $2.56 million. So this is way under this side. So they're gonna be able to expense the full $200,000 in the first year.
And that's all because of good old Section 179.
If it wasn't for this case, they would actually have to space it out anywhere from 5 to 7 years. On a 5-year example, they would only get a 40K deduction, unlike a $200,000 deduction, which will definitely save them a ton of taxes on this year. $200,000 at a 24% tax bracket here. This is roughly about $48,000 in taxes saved, all in the first year.
So this was the same truck, the same tools, the same work. Now all we're doing is just front loading and taking the deduction the first year, because now Bob's gonna have $48,000 more in his pocket. All right, quick thing before we go any deeper. If you're a US business owner planning to buy vehicles or equipment in the next 12 to 18 months, the difference between structuring it right in 2026 versus winging it can easily be tens of thousands of dollars over the next few years. If you want a pro and map this out for you, there's a link below to book a tax discovery call with my team. On that call, we'll look at your income profit, read what you buy and win, check out your vehicle weights and business use, and build a legal, ethical, IRS compliant plan so you're not guessing with Section 179 and bonus depreciation. We also back that with a simple guarantee. If we don't find at least $3,000 in tax savings opportunities, we refund you what you paid for the blueprint. If that sounds useful, hit the link, grab a time, and let's get back into the mechanics now.
All right, so there's kind of two ways of doing things. There's the old way, and then there's also the Section 179 way, and we're gonna show you the differences between the two here.
So most people probably have heard, you can write it off, but they don't understand how fast they can actually do it.
So I'm gonna say we're gonna buy a $75,000 truck that we've been using. And the old way here is that you would have to deduct it over 5 years. So you'd only get $15,000 each year. And that's really slow.
At a 24% tax bracket,
You're only getting about a 3.6K benefit each and every single year, smoothed out. But let's go over to the 179 way. 75 year, and we're gonna stay on year one. We're just gonna take the whole $75,000 the whole first year, so you get the huge benefit that year.
Granted, yes, you don't get a deduction for year 2, 3, 4, 5, but this is money, right? Time value of money. You want $1 today versus $1 tomorrow.
At 24% tax bracket, you're gonna save about $18,000 in taxes, unlike over here where you only save 3.6K.
So almost a $15,000 difference. So the key idea is this: same total tax savings over time, right? About 18K versus you got 3.6K times 5 over here, but you have just sped it up all in 1 year. And if you're growing a business, cash this year is worth a lot more than the same cash 5 years from now. All right, now let's talk about 100K vehicle stacking with 179 plus bonus depreciation. I know everyone always loves cars, so we're gonna show you exactly and break this down how it works. So in this example here, you're gonna buy a $100,000 truck. So you just bought like a diesel Denali or something like that. And this weighs, the key part here is the weight. This weighs 6,500 pounds. So let's break down how this actually works between 179 and bonus depreciation. So the first part is you're gonna have step one is gonna be section 179, and that's about $31,000 this year on a minus 100K. You're left over with $69,000. Then we gotta go into step two. You need to clean off the difference because the vehicle weighs over 6,500 pounds. You're able to use bonus depreciation on this and wipe out the full 69K. So you have to use these in tandem here. So these are combinations. So you have to first use 179, then you have to use bonus depreciation. But you can see the power of this here because let's break down the tax savings though. So let's say once again, we're at 24% times $100,000 business vehicle here. This is $24,000 in tax savings. So that car really only costed you $76,000 out of pocket. But what you did was you only probably put 1K down and you financed the other $75,000. So this is where you're able to create expenses that don't even cost you that much out of pocket. Many people think that you have to pay this in full. You do not have to. As long as you get a loan with it, you're good to go. I just want to make sure that you get this point across is that the vehicle weight matters. So for the IRS, there's really the one number, $6,000. Either you're greater than or less than 6,000 pounds. And here are the rules for it. If it's greater than 6,000 pounds and use it 100% for business use, you can write off 100% of it. If it's less than 6,000 pounds, you'll be able to take a little bit of bonus depreciation the first year, but you will not be able to write off the full thing. That cannot happen because this part of the tax code was made for heavy machinery and equipment. So you gotta make sure you're buying big trucks. All right, so these cars you wanna kind of think about it would be your Civics, it's gonna be your Jeep Grand Cherokees, your good old Toyota 4Runners. These are all less than 6,000 pounds. They're great cars, but have low write-off limits. Now the 6,000 pounds though, you can think about this like your big F-150, possibly your Sprinter vans on those. Now another key part is that, and you have to have this, is gonna be how much you actually use it. So it has to be more than 50 of the business use. So if you're mixing business and personal, you only get the business portion. So as you can tell, there's many rules and steps to what you're doing here. But the big picture here is that section 170 lets you pull future deductions into this year. 100% bonus depreciation 2026 lets you mop up the rest, and heavy and commercial vehicles often get the biggest immediate benefit. With the right weights, usage, and timing, you decide whether to keep your money or tip it to the IRS. If you're a US business owner and you know you'll be buying a vehicle or equipment in the next 12 months, you have a small window where the law is very friendly to you if you use it correctly. If you want help making sure you don't screw this up, here's what to do next. Click the link below in this video, book a tax savings blueprint call with my team. We'll look at your 2026 income and profit, review what you plan to buy and your vehicle weights and usage, and build a clear written plan for using section 179 and bonus depreciation in a legal, ethical, IRS compliant way. And we keep it simple. If we don't find at least $3,000 in tax savings opportunities for you, we refund you what you paid for the blueprint. So if you're going to spend the money on vehicles and equipment anyway, don't do it blind. Hit the link below, book your tax savings blueprint call, and let's make sure you keep as much of your money as the law allows.